Good evening, ladies and gentlemen. Today is the 14th of July. It's a Wednesday. Generally, Wednesday risk reward is in favor of credit strategies. But that being said, there's so little premium in the options that any even slightly drastic move in either direction can blow them up. So that being said, we opened on quite a negative note that very quickly changed colors. We had a steady up move that triggered short covering and continues to trigger short covering. As I speak to you, it's about 1 o'clock and calls continue to expand. The 15900 put, which went down to 7, right now is trading at 25, so has tripled in value. And yeah, it's been one of those days. I had a view, my view went wrong. I was expecting a rejection at the 840, 850 levels. We managed to cut through those, and more or less from a risk management perspective as well, I was down about 0.8% on the trade, not quite 1% of the capital that I used, but at that point it just didn't make sense to stay in the trade anymore or to do anything because I had a very defined criteria. It was that if this call option breaks this value, I take the exit, and that's more or less exactly how it played out. So yeah, not a day that went in my favor, but once again, I come back to it, like as long as you cut your loss, especially in non-directional strategies, if you get out well enough wherein you don't really dent your capital at all, not something you think twice about, it will help you stay in the right mental state to trade the next day, right? And with tomorrow being the expiry, it offers much better opportunities, and I would much rather not have to exhaust myself trying to firefight and doing something, especially when so many times we've seen the past few weeks, whenever there are aggressive put shorts and longs built up, basically long view position, that it doesn't take much for all of it to get unbound very quickly if things start to reverse. So it just didn't make sense for me, and that's why I took the exit. I hope you had a good trading day, and I made some changes to the covered call towards the end because this weekly expiry is coming. Those options are going to expire worthless, and I have to take credit from the next week. And generally, a strong up move like this is a good time to do that. So thank you so much for watching. I hope you have a good evening, and I will catch you tomorrow.
Want to meet like minded traders and discuss option strategies, adjustments, and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. The time is 11 o'clock. Unfortunately, some of my earlier clips did not get recorded as my OBS settings were not optimized for the standalone laptop. I'll just go over what is happening today. We opened gap down after US markets closed in the negative, and US futures went the negative as well. So mood was slightly in the profit booking side. We opened slightly gap down and we headed lower. We tested around 15,760 thereby, and from there I've seen this massive short covering up move. Calls, the prices of calls had gone down tremendously. I think the 15,900 call at some point was trading for 8 rupees. It doubled in the matter of no time, simply because of the amount of call OI that had built up at 15,800. It was almost about 75 lakh calls here, and big unwinding is taking place now. So going by the straddle pricing currently, which is being priced at about 100, that gives us a range of the two legs 15,700 and 15,900, and that is the position I've taken. I initially had a slightly bearish view, but into the short covering that kind of backfired. My sold puts were as low as 15,600, but I had to move them up in order to take credit to manage the fact that my calls were um, starting to lose. In fact, was did a quite quick job of getting out of the 15,850 call. Otherwise, the short covering would have hurt a lot more than it did, and had moved it to the 15,900. That being said, I am still down close to slightly under 5 points, about 4 points, and we are currently in sort of an IV spike situation where the puts really have not lost that much value versus what the calls have gained. More or less, my idea is that we will find resistance around the 15,850 mark. If we strongly take out 15,850, then I'll be exiting the entire trade in general, because at that point it will not make too much sense to stay in. If there is good enough credit at that point, when we test 15,850, the 15,750 put still has about 20 points of value in it, then I will shift my puts to 15,750
and try to work from there. But in case this is trading below 20, then there is no point in doing all of that. Right now, once again, you can see the calls are gaining value, but the puts not necessarily giving up too much, which is leading to this kind of a call side IV spike. So currently, one of two things will happen eventually, where the puts have to either lose value or the calls have to come back down. At the same time, on a mark-to-market basis, since I'm already down about let's say 5 points, I don't plan on losing more than 8 points for a day. So if I lose another 3 points from here, which roughly would amount to about 2.5 negative mark to market, I'll just take the exit at that point. To keep you posted, time is 11:10 and we're not even halfway, but quite the short covering got triggered here, and a lot of it is coming from Bank Nifty and IT. Okay, time is almost 12 o'clock and let us just go over something. So into the up move, we saw a steady writing of 15,800 put. Right, so heavily shorted. And meanwhile, while there was unwinding of the 15,800 call option that had really built up in the morning, the 15,900 call option really hasn't gotten unwound that much. So even now, there's considerable amount of open interest at 15,900, right? So 60 lakh. 75 lakh on the put side at this thing, which is never comforting when you see intraday so much put option OI build up so quickly. It's never a good thing because it means that potentially if it goes wrong, that much unwinding you see. So a big headache. Anyway, right now from what my position looks like, if I take a look at the 15,900 call option chart, clearly if it heads about 21, then it's in danger territory, because yesterday there would have been many people who shorted this at around that 21 22 range and whatnot, and today at the open it crashed like anything into the down movement all the way till 7 at one point, and people would have continued to short this thinking, okay, now 15,900 is completely out of the cards. That short covering really put everyone in a panic. Some amount would have gotten covered here, but if we head higher and we start to break out about 21 here, then that will be very difficult to manage. It cannot be managed from a strangle perspective. So there won't be enough premium on the put side, and you'll have to take too aggressive of premium on put side. So above 21, I have no intention of managing these calls. Any price above 21, no intention of managing these calls. I'm not rolling up my puts higher because at this point, with the kind of put charts that have built up and longs that have built up since morning, I mean, take a look at how the market is moved. It will not make sense for me to increase my long bias at this point. Doing anything to make my position more delta positive, it'll not be of help. So at this point, if this expands to around 21, I'm cutting the trade, and if we head down now into a down move, there'll be a good call side IV fall off, which will initially put me in a positive. It will greatly benefit my position also because my delta neutralizes at 15,800. But any slide from there more than that will lead to massive put side expansion, because same logic, huge number of longs built up during the day. When I say longs, I mean longs on the index, so shorts on the puts. Those will start to get unbound, and it can be an unnecessary roller coaster that I'll be signing up for. So that's basically the trade for now. We'll keep you posted. It's almost 12 o'clock. We continue to inch up slowly, and it'll be interesting to see. We take 15,850 out. We'll keep you posted. Time is 12 o'clock, and as of now, the 15,800 straddle, if I'm not wrong, is still trading at 100. Okay, it's again now. It's at 101, 102.
Okay, we've now made an up move and we're holding above 15,850. Whatever short covering in the 15,900 had to happened before we made that up move. Now, I'm not taking in any additional put side credit. I'm not moving up my puts. I'm not doing any of that. Instead, I just have this particular, like around 23, right? 23, I'll be exiting the position. That's it. Or exiting the calls and probably trailing a stop loss on the puts. Or just in general cutting the entire position. No trade beyond this. If I want to take an additional put side credit, now is not the time, because a 20-point down move will expand these from 18 to about 22, 23 in a matter of no time. As long as these calls are trading at 20 and below what I now set as my exit condition, I'm fine. So if the calls do move up by another 3 points, I can lose 3 points, assuming the puts don't move at all in the entire situation. But Yeah, no other adjustments to this, because we are just unrelentingly heading up, and yeah, continuous short covering is happening. So I think that should be limited at some point. And the risk reward of increasing any longness of this trade is just bad. It's straight up bad idea to do that. So it's better to have this directional risk wherein you are expecting a rejection, or basically that we won't have continued further up move. That would be a better view to have than that we will now be neutral around 15,850. There's a very good chance we head back down to 15,800 also, probabilistically speaking. Anyway, because it's been that kind of a market. It's been a mean reverting market. Whenever we head higher, we keep coming back lower. Whenever we head lower, we keep coming back higher. Of course, that will break at some point, but it hasn't broken yet. So no need to assume that this is going to be the time when it breaks, right? So we're going more for probability than reward potential. Okay, the stop loss hit and I took the exit. Fair enough. This big candle, so I had to exit during the candle. Some slippage, but fair enough. I had a view, went wrong, and didn't pay off. What I'm going to do now is for my covered call positions, this week's positions will expire tomorrow, so I'll just cut them off, and this is a strong up move. So in this up move, I will be rolling forward the weekly calls. So this 16,000 weekly call, which has done its job, now only has 4 points left in it. I'm gonna exit this, and I'm going to sell 16,000 call of next week. I'm going to carry that. And on the bank Nifty as well, this weekly call doesn't have too much. It has quite a bit of premium in it actually, but I will roll this tomorrow. Instead of doing it right away, I'll roll it tomorrow. So otherwise the position is doing quite all right, wherein the future is making a good profit, the monthly call is making a loss, and the weekly calls have been more or less paying up. And same thing goes with Nifty, where the future is making a profit, the monthly call is in also making a profit, and the weekly call we've just entered. Yeah, it was one of those days. View went wrong. Was not expecting this kind of a continued short covering up move. I would have been more of the view that we will see a rejection from 15,850. It didn't happen for a while, and we've headed higher, and beyond this I don't see any trade that makes sense. And also a little less than 1% stop loss for the day, but that is more or less enough to say let's exit. So thank you so much for watching, and I will catch you tomorrow for the expiry trade. Take care.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.